Alright everyone, so in the last video I mentioned that when I take back-to-back classes, I have a way to get myself out of that low confidence zone, and the trick that I use is to do quite a bit of backtesting. So what that helps me is it rewires my brain to think again. It's like going back and reading a book before an exam. So it rewires your brain, gives you more confidence, and it really drills into you that the process you've developed really works. You just need to go in and execute when there's the time to actually perform, either in a trade or maybe like in an exam. So to do this backtesting, I like to do backtesting in a blind manner. What that means is I'm going to turn off all indicators, and I'm going to go to the Discord server, which is over here, and I'm going to read the signals as they would come to me on the Discord channel. And my idea is to work with only just the information that is available in the signal when the signal comes in, so that I'm not cheating and I'm not able to predict, I'm not able to see the price, how it has moved forward while taking the trade, because I think when I do that, it creates a weaker sense of backtesting in my mind, because I can already see what the price has done in future. So everybody minds can, it's very easy to, in hindsight, to go back and say, oh, this would have been a perfect spot to buy or sell. But to really train your brain to think in probability sense, you have to take the trades live. And the closest way to replicate a live trade is to do a blind backtesting where you don't know how the next set of price is going to play out. So let me show you what I mean. So let's start with this one. This was the most recent trade. I'm doing backtesting on DH1 time frame. You can pick any time frame to backtest. DH1 is one of my favorite time frames to backtest on. So this trade recently came actually yesterday morning at 5 a.m. AUDCHF. There was a historical 3 candle FVG on November 18 that price had run into. So that means this was a time when a fair value gap was created, and this was the information available to us during the signal. That I think probably here it was running into fair value gap, and this is where the signal had been created. So let's go to AUDCHF, and the signal came on March, the lower time frame was March 4th 12 UTC. So let's do that, March 4th 12 UTC. So I'm looking here at the bottom when I'm looking at the time, March 4th 12 UTC. So the signal would have completed at 12 UTC. That means my reaction would have been on the next candle. So what I'm going to do is cut the price, stop the price from flowing forward from here, and on here as well, stop the price flowing forward. So now when I enable price on higher time frame, I will just enable all my indicators again, and you can see this is exactly how the screenshot came when the signal was generated. So let's walk through the higher time frame first. We know that this next candle would have gone into here. This was something that was given to us in the signal as well, the historical fair value gap, and it would have reacted from there. Let's go to the lower time frame. We have already marked it here. I think we've already cut the price here as well. So I'm just going to enable everything again. Okay, so this was the signal. Now I'm just going to do my analysis here, and I'm just hopefully going to say it out loud so that you all can see how I've been thinking about the analysis. So here this seems like a good good liquidity sweep, and this was the last push up where the price broke down. But the challenge is that this is a completely unmitigated area. And quickly switching to line chart, yeah, you can see clearly that this is truly a fractal low, and unmitigated fractal lows are generally very potent. The signal has come into this zone. We want to take a sell, so you want to make sure that there are no significant unmitigated areas in the path of the signal. So that means this would have been a lower time frame zone to trade from. The good thing is that this unmitigated area was first mitigated by this candle, the candle before the signal, and then our signal candle formed. So this is kind of already mitigated at least till this point. So if the reaction has to happen, it will probably happen somewhere down here. And let's see if we can extract 1 hour before that time. I think it's an okay trade to take, considering it's the high of the range. And it's a premium pricing. So let's see what happens. I'm just going to now play the price forward. I've done my analysis, and let's roll. So you would have come in, got an entry, and this is where we would have taken out 1 hour. In a separate video, I'll discuss how I evaluate entry, how do I evaluate my risk and set up my risk profiles. So clearly we have had 1 hour exit here. Considering this is an unmitigated breaker, I would have moved my stop loss to break even at this point. Let's do that. So at this point, I've already extracted 0.5 hour from the trade, and let's see how the price moves forward. Okay, it just basically came and gave me an exit. So, and it also actually would have stopped me out if I would have kept if I have not moved my stop loss here. So this was a 0.5 hour trade. Let's move on to the next one. Let's look at this one, ZARJPY. This was an order block formed on February 28th. Let's go and check it out. Before that, as usual, let's turn off everything so we have no idea how the price is going to flow out. ZARJPY, Feb 28th. All right, let's find out where is Feb 28, 26. So I'm looking here at the bottom of the dates where dates are showing up. So if the signal was Feb 28, I would have received it on higher time frame on 1st of March. Let's go and cut time on 1st of March. And let's open up higher time frame. Okay, so here's the signal. Now, a couple of things to note here. These are qualitative aspects of the signal, that the signal is rejecting from 50%, which is not a good idea, because when I want the signal, I want it completely in the premium. Here it has practically come into a discount and now started to reject from there. So I would be worried about that. And then looks okay to me. Let's look at where was a lower time frame signal element for this. Lower time frame was March 01 9 UTC. Let's see, where is that? It will be obviously after when this candle was formed. March 01 9 UTC, I would have received the signal on 10 UTC. Let's go and cut the price on 10 UTC and enable our indicators. Okay, so this looks good to me. As you can see, in stark comparison to the previous one that we just saw, and this is another qualitative aspect of the signal, that you can see there are no unmitigated areas here in the short side of the signal, because we are going to sell this, right? So if we want to sell this, then we want to make sure that there are no unmitigated structures down here, which are not. Let us see if we can find something unmitigated here. Let me expand the lower time frame. So there is, I think, no, this was also mitigated. So there are no unmitigated structures here. So this is good. I think till this point there are no unmitigated structures. The first mitigated structure is over here. So let's mark that as a sensitive area, just so that we can keep track of it in future. And let us also quickly see what are things, elements in the higher time frame that we would need to be careful about. So I think there's a liquidity, like a fractal low here, which just basically sits on top of our sensitive level. So I think that is an important area that I would be interested to take off at least a major part of the trade as we get into it. Evaluating the top side. So switching to a line chart quickly, does look like an equal high here, maybe. But I think it seems like a good idea to try it out. Draw my trade box and set up the risk reward. Okay, so now you can see that 1 hour is exits here. What I would do is I would basically pull up the 1 hour over here so that it coincides, and then we'll see how this plays out. Okay, so we got we took out a partial here. I actually stopped drawing these lines because it just pollutes the higher time frame too much. So we took out 1 hour here, and we'll let the price play out. You can see that price came in very clearly on our liquidity level. I think in hindsight we should have set up some sort of an exit here, not waiting for the price to come and hit 2 hour completely. Yeah, so price went back and obviously stopped us. I think the important thing to note is that when you have a very strong liquidity level and more sensitive levels to club together. Don't wait for a full R to be hit here. Take the partial as quickly as you can. So on this trade we took 0.5 R here, but our stop loss was still here. So plus 0.5 and then minus 0.5. So this was a break-even trade. Let's check out the next trade. All right, we're going to then delete all of these markings, turn off all of our indicators again, and the price as well, and then go and see what's the next signal. All right, so these two are practically the same signals. You can see they came at the same time, 10 UTC, 10 UTC. So let's just take this one. Let's look at the signal briefly. We have an order block with swept liquidity forming, and let's see how this looked on the charts. Quick reminder: Feb 25th was the higher time frame when the order block was formed. And this, what pair is this? USD CAD. Just clean up any previous markings. Feb 25th. So I would have got the signal on Feb 28th, which is practically, I think, Monday or Sunday the next week. And let's turn everything on. Okay, so this is exactly the signal, the orange bar here that would have generated the signal. So when this signal was generated, you can clearly see that this signal was in premium and generated an order block after sweeping all of this liquidity. So I consider these some of most potent order blocks. So I'm going to mark the order block. And mark anything that is at the bottom. So this definitely looks to me like a liquidity level. Okay, now let's see when was the signal. The LTF signal was on H1 was on Feb 28, 10 UTC. So this would be Feb 28, 10 UTC. The signal would have come to us. We would have reacted on the signal on at the starting time of 11 UTC. So let's go and cut the time there. All right, so this would have been the setup that was presented to us when we would have come to look at the trade, and I think this is exactly how it showed up here as well. Now this is not a good situation. I mean, the trade might still work, I don't know. There are lots of equal highs here, and then there are equal highs here. So I would not be interested in taking this trade because liquidity is getting set up on this side as well. This might still work, I don't know, but yeah. So let's see how this played out. I would have not taken this trade. This would have been like a trade zone to take the trade from. Seems like seems like we would have not got an entry. Obviously there is no entry here, and when there is entry, it's over here. It's too far out from the signal, and we don't know how it will play out in future as well. So all right, skip the trade, moving on to the next one. AUDUSD. Okie dokie. Let's see. Feb 24 order block. AUDUSD. Okay, Feb 24th. Where is it? Feb 24th. We would have got the signal on Feb 25th. Let's cut the time there. Open up higher time frame. Okay, so this is again something which I really don't like, where I think you can see this happening again and again, that the signal candle that created the signal came into the discount area of higher time frame itself, because this could mean that everybody who's trapped here could be mitigating, and that's the area I don't like. Nevertheless, marking what's available to us, this seems like now a clear area of liquidity. And let's see, when was the lower time frame signal? Feb 25th 8 UTC. Okay, Feb 25th 8 UTC. Feb 25th 8 UTC. We would have got this on 9, cutting the time on 9 UTC. Yeah, I think I really don't like this signal, because the signal is not touching the higher time frame. It has not mitigated the higher time frame, and yeah, I think that's, and plus I think if we draw out the box, it again violates the same basic rule that if you just draw the risk like this, the 1 hour would basically fall into this unmitigated area, which I really don't like. So I'm not going to take this trade and see. Let's see what happens. Boom, loss. Okay, great. We didn't take this trade. Our analysis prevented us taking the trade, which is exactly what we wanted. Moving on, next one. I think these are the same ones. Feb 25th 8 UTC, Feb 25th 8 UTC. Yeah, these are the same trades. Let's move on to the next one. All right, EURUSD. It's a bullish trade, right? Oh, okay. It's rejecting from a historical fair value gap. Fair. What date it is? Feb 01. I see. The historical fair value gap is on Feb 01. But the trade came on Feb 24th. That means, okay, let's mark the candle on Feb 24th. Oops, sorry, we didn't change the pair. My bad. EURUSD. We are marking the candle on Feb 24th. Feb 24th. That means we would have got the signal on Feb 25th. Oh, this is a lower time frame, so it was executing in Feb 24th. All right. Let's basically cut the signal here. The FVG was on Feb 01. Where is Feb 01? There should be Feb 01. Okay, I see the FVG. It's a very trivial fair value gap. So it's a valid one, and there's an order block sitting right below it. All right, on lower time frame, the signal came on Feb 24th, 19 UTC. Please remember all the times here are in UTC. 19 UTC, that means our reaction would have been on 20th UTC. Okay, now this is another qualitative aspect of the signal that I call this a very wild signal. And you can see that it took a lot of energy to come down. There were lots of fair value gaps, and then it took a lot of energy to go back up, where I mean, if we draw a range that we want to trade from here, it's going to be just too big, and it also violates our other rules that the signal candle itself has now mitigated another opposing structure. And if I were to draw a risk reward here, it's going to be crazy as well. So it's basically telling me that it wants me to traverse the entire range here on the higher time frame. Over here, I'm looking here. This is what 1, 2, 3, 4, 5, 6, almost a week's worth of range. I don't think I'm interested in holding the trade this long. So on that qualitative nature, I'm not going to take this trade. So let's see what happens in the trade. It would have not even maybe given us 1 hour. Yeah, barely would have given us 1 hour and collapsed after that. So I think it was a good analysis to not take this trade. All right, cleaning price again. Let's move up. EURUSD, another historical fair value gap on Feb 24th. I think all the Euro pairs were moving that day. Feb 24th. Okay. Let's go to Feb 24th. Cut the price there. Open up higher time frame. The fair value gap was from Feb 02. This would be Feb 02, I think. Feb 02. So this is the fair value gap. The fair value gap sits in discount, so looks like an okay plan to me. And then on the top side, this is where seems to be a lot of liquidity sitting. Lots of equal highs. All right, so let's see how the lower time frame looks like. The lower time frame came on 1800 UTC, and let's just quickly look at the trade. 1800 UTC. Okay, let's see. We would have got the signal on to act on 1900. So we're going to go cut the time on 1800 UTC, 1900 UTC. Just going to focus here to check something on the lower time frame, that all of this liquidity was swept by the signal. Was this, sorry, my bad, was this okay, so this low was taken by the signal. Now we do again have an unmitigated structure here, and but looks to me like a weak structure because there are like equal highs available here, plus we grab liquidity and we are on a discount. I think I would be interested in taking this trade. Let's see what happens. Okay, so basically, obviously, this candle I'm not using this, seeing this candle, so it would have definitely been acting over here. So basically, bottom of the range. Okay, let's see what happens. This area is mitigated, so I'm not that worried. This is the only place it's not yet mitigated, but there are equal highs here, so I'm going to take the trade and see what happens. Set up my risk reward, and yeah, I think 2 hour is where I should be careful where how the exit is supposed to be, but let's get through 1 hour first. Okay, so we got tagged into the trade, and 1 hour is hit. So you would have got the entry here or here, no matter how we would have set the limit, and we obviously got 1 hour here. So it is looking pretty okay to me. This looks like mitigated, so this candle created the order block, and then the second candle mitigated it, so it doesn't look that bad to me. But I think above this is where we start entering this area. I think this also looks mitigated, so let's see how far we can go with this one. We're still in the trade. We haven't moved our stop loss. I think we should have. Yeah, so this we took out 0.5 hour here, and then we surrendered 5.5 hour here through this. That means this was also a break-even trade. Alright, let's move on. Going to delete all analysis here, turn off all price action. I hope I'm able to show that it's not important to win or lose on every trade. What is important is that we are able to take and analyze a given situation properly and form an opinion about it. Alright, the next one is NZDUSD, and seems like it is again a historical fair value gap. I think it would have been rejecting from this fair value gap. So let's go and check it out. NZDUSD. I think I took this trade. I don't remember it, but let's see. NZDUSD. Feb 23. Okay, let's cut the time on Feb 23. And the historical fair value gap was from Jan 21. So it would have been Jan 21 would be, here's Jan 21 over here. But this was already, oh, I see, it took out this fair value gap and then it was reacting from this one. So the bot calculated it using this, but it was then also reacting to this one. Let's mark that one as well. And they both are in premium, so I'm okay trading both of them. And of course, this was formed after a liquidity sweep and fair value gap. So what are the other targets below us? There's a clear fair value gap here that we should be careful about. And I think there's a manipulation here that swept the low of this doji candle. So if you're taking a trade up here, then this would be a good target to get in. Okay, so let's see what was the lower time frame time. Feb 23 15 UTC. Feb 23 15 UTC. It'll be Feb 23. So we would have got the signal on 15. That means our reaction would have been on the 16th hour UTC. Enabling time. Okay, so obviously it didn't reach here fully, but reacted off before that. So that means it was reacting basically from this liquidity reference point as well. I see, I think this is where it was reacting from. It didn't reach there as well. Interesting. So I think same rule applies here as well, that here is a fractal low sitting where price just got delivered, but I do see a lot of equal lows that are ready to be taken out by this fractal low. So should I be taking this trade? It goes against our rule set, but I do see some good equal lows sitting here. So this is not a very strong push up, and if we look into, this is a clear break of structure and liquidity grab. Were there any other? And this could also be, something else I've seen is that when on, and I think this is especially true on higher time frame, that when price creates a first push down, it generally comes back and tries to create a second push down before it goes up and grabs liquidity. So it's basically engineering liquidity, and if we can get into the part of where the liquidity is getting engineered, I wouldn't say that's a bad deal either. So let's see. I mean, I could be wrong totally. Let's set up our risk reward and try to take an exit here. Over here, just above this, just at this line, so that we don't have to deal with this unmitigated structure over here. So I would basically put the first exit here. Let's say target and no sync. Let's see what happens. We got an entry. Boom. Nice. So we hit our first target, and I would basically keep a second target right here, so that when the liquidity sweep happens, they're going to take out this liquidity eventually. When this liquidity sweep happens, I want to make sure that I get taken out, like my second target gets taken out with it, because the price could just run up from here and like liquidity sweep and then runs up. We don't know that, so I don't want to wait for that to happen. Okay, fantastic. Now when this would have happened, I would have, price would have been going here. I would have trailed my stop like really close to make sure that I mean, I don't want to price to go back up once the price comes here and gives me an exit, tries to give me an exit here. So I would have basically started trailing my stop somewhere here, and then when on a lower time frame obviously, and when this would have happened, have taken me out. Let's just see what happens to price after this. I think keeps going down. What date was this? I think this was when war broke out, 23rd Feb. Yeah, this was a good trade. Full 3-hour hit, I would consider that. All right, let's turn off the price again and go and back test the second next signal. CHF JPY, and it was an order block in discount, which is fantastic. So Feb 21 CHF JPY, CHF JPY. What was the hard time? Feb 21. That means our signal would have come on Feb 22. Let's cut the time there. Oh, this looks so weird. Look like a weird signal. Seems like maybe a miscalculation. This is not an order block. So basically, what the bot is trying to tell me is that this is an order block. Well, this does look like manipulation to me, because this is a lower time frame range, but then prices overall in range. I don't want to mess with that. I would rather not take the trade. Let's just see how it plays out on the higher time frame itself. Yeah, not a good signal. Good. Our analysis prevented us from taking this trade. I'm happy. Let's move up. EURUSD. What was the signal? It was an order block. Okay. Feb 16th. EURUSD. Feb 16th. We would have got the signal on Feb 17th, cutting the time there, turning higher time frame on. Okay, that's I think this was before I started implementing premium and discount, because this is definitely a signal in discount, and we don't want to trade sells in discount or buys in premium. Just for kicks, just for fun, let's see how this plays out. I have no idea what will happen here. Okay, would have been a good signal nevertheless. Well, I think I'll stop here. We've done quite a few number of trades now, back tested a couple of them, and you can, as you can visibly see, that my enthusiasm has gone up now again. Doing backtesting really helps tune my brain to see information which I might be missing when I'm taking losing trades. So thank you so much for bearing this long with me, and I hope this backtesting helps everyone. Take care. Bye.